So in this video, I'm going to show you the reasons why I personally don't use pending orders trading Forex. All right. So make sure you watch till the very end as I talk about both advantages and disadvantages of using pending orders and why I don't choose to use them. All right. I know pending orders have got benefits like avoiding being constantly in the market and capitalizing on breakouts, reduce slippage, capitalizing on breakouts, avoiding manipulation, and things like offer better risk management and allowing trading even when you're away, and all those good benefits that you're going to get when you're using them, right? But look at this. So, for example, if I had taken this particular trade right here, and if I had set my order block, my entry right here, and of course, probably my stop loss is going to be bigger. That's one of the things I actually don't like about it because one, it reduces my risk reward ratio. Okay, it means that I also need to accommodate for those unforeseen circumstances. I have to put my stop loss somewhere below there, which should give me like a 1-4 risk reward ratio. Primarily on this trade, I would actually make about 1-10, right? So it reduces the risk reward ratio on a given trade. And that's one of the reasons why I actually don't trade with pending orders. Number two is that sometimes you'll be taken in, right? You'll be triggered in, and the market still continue to go against you because you're not there to actually take the confirmation to see if the market actually is aligning with your strategy and if the market has actually met your entry criteria. All those are things that you can actually do when you actually on the chart and you're able to see exactly what is happening, and you can make an informed decision to whether buy or sell at that particular point right there. So another thing is, look, instead of you actually just putting setting a pending order just here, say you want to sell like want to buy right here, right? You say you set a buy limit and you just leave it there. Why not set an alert? So you can simply just set an alert here and then just wait for the market to be triggered. I know that there are a lot of things that people usually say about pending orders, like maybe they are very busy at work, but you can always spare 1 minute. It takes less than a minute to execute a trade, guys. Less than a minute. Instead of you taking unnecessary losses, you can just set an alert, and once the market has come to that particular area, you'll be able to actually see how the market is reacting. If the market is giving you confirmation to sell, you can actually get in. If the market is giving you confirmation to buy, you can actually make that informed decision to actually buy or sell. Like just letting the market just trigger you in, and then it continues to go against you, because sometimes it will be just a big momentum candle coming to your area. I'm talking about this today because earlier on today I was able to share this forecast right here. So you can see that I was able to share this forecast in our community right here. There was a focus on GBP USD and another focus on Euro USD. So whenever I share forecast like this, now I want to see the market coming to that area. This will also shared on our Facebook right here, Instagram, and everywhere. You can see that this forecast we sent in our communities right here, and also for free on Facebook and Instagram. So basically, I was waiting for price to come to these levels right here. Once the market came to this area, then you make an informed decision to get involved or not. But if you just say an alert right here, set a pending order right here to actually buy, when the market comes there, then look at what would have happened right here. So the market would have just taken you out and then goes in your direction. But if you're on a chart, it's easy to see like, oh, okay, the market is doing this. Now let me wait for my confirmation. So right here, you can see that the market never gave you a confirmation right here. So you have to wait it, you'd have waited and see how the market reacted from that. You can see that the market just took out this low. And after that, what did the market do? The market gave you a confirmation to buy. So when you're here, you just see, oh, the market is here. What is the market telling me right now? The market breaks this structure right here. Okay. Once the market has broken this structure, then what do? Wait for the market to pull back. So you can see that right now, you'd have waited for the market to actually give you this. And you'd have entered on this, maybe on this particular candle right here. This would have tagged you in and you'd have actually been involved on this particular trade. Or you would have just entered after seeing this right here. You can see that the market gave you a nice bullish engulfing pattern right here. So you wait for this, and then the market closed above this, and then you enter on the next candle open right here this would have given you a very, very nice entry, and stop loss would have been just below there. All right. So this will prevent you from taking unnecessary losses, because most of this is going to happen. The market sometimes you just go and just induce your area and then starts to go in a direction, and you're not there to check what is happening, right? And then you'll be able to you actually just find out that, oh, the market actually came to my area, tagged me in, and went against me a bit before actually going all the way. So that's really or some of the reasons why I personally don't take pending orders. I wait for the market. So instead of me taking pending orders, what I do is that I just set alerts. And then if I'm busy, I'll be able to say, oh, the market actually came to this area. What is the market doing right now? If the market giving you confirmation to buy, well, I'm good. I'll be able to get involved. If not, then I'll just let go like that, and I'll just wait for another opportunity. So yeah, that's basically why I don't really trade. But if you find them profitable, if you actually use them correctly, then by all means, right? There's some benefits. Like I've said, you can have precise entry. That's if the market just comes exactly to your POI, like just comes here and then just does this and then goes. You'd have gotten a very, very nice entry. Yeah, that would have actually very nice, would have been very nice. But how many times does that happen? It's very common to see a market actually going below your stop loss or below your POI before it actually goes in a direction. Right. So and also things like maybe it prevents you from being emotional in the market. Yeah, but that comes at the cost of you being able to take those unnecessary losses and everything. So, if you use pending orders, tell me some of the benefits that you actually find in the comment section. Because for me, literally, I don't think I can do it. Right? I don't think I can do it because it has a lot of disadvantages. You take more unnecessary losses. Your stop loss is going to be big, thereby you having a lower, a lower risk to reward ratio. And by you having a lower risk to reward ratio, it means that, I mean, even you won't have bigger risks because your stop loss would have to be big. So this is a 4 pip stop loss. So if I had to use a pending order on this particular trade, I would have to like maybe go like 11 tips, and which would reduce my risk reward ratio 1 to 4. And personally, I'm not really comfortable with that. So for me, I would rather just wait for the market to come to my area. I'll set an alert. And once the market has come to my alert, I'll be able to check my phone and see, oh, right now the market is in my area. What am I supposed to do? Should I enter or not? So you'll be able to make an informed decision upon price coming to your area and all that. So yeah, let me know in the comment section and how you handle this, whether you use pending orders or you use a market execution like we do here. So yeah, let me know in the comment section. And yeah, I just wanted to actually talk about that because this is exactly what happened today. We had two levels we are looking at. Unfortunately, the market tagged both GBP tagged and went in our direction. And then also on EURUSD, the same thing happened. You can see that the market took back came to this low right here, went there before it actually moved a little bit in our direction. And now we can see that the market is still retracing. So not much movement on EURUSD even today. Alright, so let me know in the comment section, and I hope you found value in this video. If you have, make sure to subscribe, like the video, comment in the comment section. Until next time, goodbye.